Welcome back, YouTube. My name is CJ. I'm here with my co-host JT Rainman.
We're shaking.
Same old, same old. So today we're going to talk about what is a crypto as far as regulation is concerned. Are they commodities? Are they securities like the SEC says? So let's start off with the definition, which, you know what? I had it up on the monitor and it is gone now. So Aaron, give us a brief overview of what commodities are.
What a commodity is. It's a thing. It's pretty simple. 3 words. It's a thing. No, it's basically a commodity is, it's a thing. It can be corn, oil, gold, S&P contracts. It's a contract on a thing, say gold, for example, or oil. And what futures are sounds fancy, like you're going in a future trading something in a DeLorean or whatever. Mm-hmm. Basically, it's just a contract on a commodity. So you can trade a future price. And the reason it was invented, came up with, is if you're a farmer or if you're an owner of an airplane company, you care about what the price is going to be worth of what your business is.
Right.
So, for example, airlines, they need to sell airline tickets, say 6 months out. So, they want to plan their vacation, come to Florida, whatever, go, and so they need to know what they're going to have to pay for jet fuel, and for crude, that's based off of what crude oil is, which is a commodity. So they want to know, they want to lock in a price so they know where to price their tickets at. So what commodity futures do is they allow you to hedge, whoever the participant that buys the futures contract to hedge. So if price goes up in oil, then they're going to make less money. The airline companies make less money on that commodity, but they're going to make money on their futures contract. It's going to go up in price, and vice versa. If jet fuel and oil goes down in value, they'll make more money on their airline ticket, but they'll lose money on their futures contract. So it's a hedge. Now, traders use it as speculation, so they basically just buy the futures contract without actually owning an airline company or airplane, whatever, airline, or a farm with selling corn that cares about if it rains or doesn't rain, the supply and demand, setting the price. So futures traders will trade these contracts, but they're basically just a contract on a thing, on like we talked about.
Yeah, something like we.
So and it's regulated.
It started with farmers basically to make sure they got a guaranteed price for their crop, whether it was rainy or dry. They knew what somebody was going to pay for.
They didn't have to worry about, oh man, I hope there's not a lot of rain, so my price goes up, or I'm scared. What if it doesn't rain, and then my crop gets ruined?
You have a bad crop.
So it's a way to like provide
stability.
Calms the big thing. Thank you
stability.
very much. Yes, good job.
Okay.
So it just calms things down. So this is regulated by the CFTC, Commodity Futures Trading Commission, and this is why the CME, which is Chicago Mercantile Exchange, and the CBOT, which is Chicago Board of Trade, are based in Chicago, because geographically located, it's right in the middle, Midwest, in Chicago, and all the other rest of the country, all their railroad tracks come right into Chicago. So you have a farmer that would truck his corn in, or his pork bellies, or you name it, whatever. Yep. And then you'd have who's ever going to buy that meat to turn around and sell it to the stores, or airline companies that are turning around and buying jet fuel or crude oil, or distilleries, basically people that make jet fuel, companies that make jet fuel, they need to buy crude oil.
Oil refineries.
Yeah, there you go.
So let's move on to what securities are, which is a little different. Securities would be like a stock or something that has like a company behind it, passes the Howey test, meaning you invest in it and you have an expectation to make some type of a profit by the work of another. Broad definition, and that's the test the SEC uses to gauge whether something's a security or not. The Howey test is what it's called. But the SEC is trying to, Gary Gensler, the head of the current SEC, is trying to say all cryptos are security. And the fact of the matter is, these rules and tools to what's a security, what's a commodity, they're like over 100 years old, and digital assets are an entirely new asset class, and they don't fit into that pretty little box that, and, what the rules are. And there's never been anything like this. So we were talking earlier about Grayscale, which is the first approved Bitcoin trust. And when they're a trust, they act as a trustee, so they actually go out and buy the Bitcoin, they hold it on their books, and they sell off shares of the trust to allow, regular traditional Wall Street type investors to be able to invest in Bitcoin without actually going and buying the Bitcoin themselves and having to navigate all that. If it's a company, if it's a hedge fund, there aren't clear rules and regulations on how they can hold these assets on the books And as bad as regulation is, and it's against crypto and decentralized, you need that regulation and clarity in the markets, because we got a couple $1 trillion sitting on the sidelines in hedge funds, publicly traded companies that are maybe skeptical to make that move because they don't know tax implications, how they have to custody it, et cetera, et cetera. They don't want to say, okay, we're going to go buy $1 billion worth, but then 6 months later a new regulation comes out and now they got their pants down and they're trying to scramble to catch up. Well, you know what I'm saying? You don't want to make that big investment like MicroStrategy. God, Michael Saylor killed it with his buy. And
so I basically, what you're saying then is, in crypto, just like we were talking about earlier, for example, gold is a commodity.
Right.
You can trade it futures contract and future options on futures contracts, the CME, CBOT, NYMEX.
But you can also go out and buy a physical gold bar.
Yes. So there's a few ways you can have gold exposure through owning bullion. Right. You can do it through futures contracts, and you could also do it through an ETF, exchange traded fund, that you can buy on the stock on whatever brokerage you have. And say, for example, GLD is the biggest gold ETF, which actually owns a bunch of physical gold. So you don't actually have to go buy a bar and ship it to your house and then hide it somewhere or whatever, put it in a safety deposit box. You don't have to do that. You can just get online, type up, boom, and now you own it in your account.
Now, the problem that we're having in crypto right now is, like we just said, you can go and buy a gold bar or a gold coin. You have the physical gold, you put it in your safe. You can buy an ETF, an exchange traded fund, and it's the commodity, the future price up and down of gold. Now, we're trying to get that in crypto, but the problem is the SEC has a slew of applications from all these different companies that saw the success of Grayscale's Bitcoin Trust and Grayscale's Ethereum trusts and how well they're doing, and they have a laundry list of these applications that they've literally been putting off for years and years because they can't figure out how to deal with it, basically. And they don't want the pricing in these markets. If they allow these ETFs to actually buy the physical assets, it's going to skyrocket the price, because you have, I think, a lot of investors on the sideline that are comfortable with investing, like you said, in ETFs, in their Forex account or Ninja, whatever they're using for platform to put dollars into assets, rather than have to learn all the ins and outs of crypto. Not that it's that complicated. I mean, it's getting pretty easy, but we got that, I guess, barrier to entry for institutional corporations and stuff. We were talking about some of the big companies that have Bitcoin books now.
This is a lot of people don't realize this, but and this is what we talk about is everybody. When digital assets first came out, 2009, I think, something like 2008, 9. I think it was 2009.
With Bitcoin,
it was first started way back. It was worth peanuts, basically.
Pennies.
And now it's up. Got all the way up 62,000 was the high or something.
It hit about 65 was the recent top, and we're about 45, right around 45.
So it's
right now.
I don't know how many percent it is. More, it's crazy amount of
a couple hundred
market cap that's came in the market, right?
Crazy like that.
Yep. But so that's coming in, and now we're having all people are taking it serious now. Like we literally had. We've talked about it on previous.
What were the companies that we talked about? MicroStrategy.
So we talked about it before. So the SALT conference was the biggest hedge fund, and this was the main topic there. And to your point, so now we have Tesla holding Bitcoin in their balance sheet. We have MicroStrategy, which is a software company holding Bitcoin.
Yep, Michael Saylor, he's the first one to do that for corporations.
What's Master, which does is it mining? Is it Master or is it
Marathon? Marathon is a mining company.
What's the other company? I'm trying to think
Riot Blockchain.
Riot that does mining.
Riot does mining, but they both companies hold Bitcoin on their books.
Right. Square holds Bitcoin on their books.
Yep.
Twitter is now taking tips, allowing tips to go in their holding.
And the next step from that is going to be you could send a tweet from one person to another send them money on, because Twitter already has the users built in. The next logical step would be to incorporate that into it. You could just tweet somebody if they link their address, send them money via a tweet, like you do.
PayPal's involved now, so I mean, you have all the big companies, all the smartest money out there, institutional money, all the main traded public companies are all adapting to digital assets, which is, to your point, is why now Securities Exchange Commission, the CFTC, which is in charge of futures, why they're all like, wow, we really need to put everything together because the demand is there.
The
public's
demand
about
is
to
there.
go. It is public, but
Absolutely.
it's fully accepted by everybody. In other words, Back in the day, we've talked about this. We used to have precious metal coins, and then we had cash, fiat currency, and then we had checkbook, and then we had credit cards. So now we're going back full circle to coins, but this time it's digital coins instead of having a piece of metal in your hands. So now this is becoming in other words, if you want to conduct business in the world, then which is why other countries like El Salvador have adopted Bitcoin as a main form of their currency. Like we have United States dollars, they're having Bitcoin, right? Not just that they use it, but it's actually going to be their main currency.
They made it. I think it's a sovereign currency.
Right.
You can go into a store. You can pay with U.S. dollars. You can pay with Bitcoin's the one they started with, or I don't know what the name of their currency is in their country, but
just to give you an example, not you example, everybody listening. So if I went to El Salvador and I said I have 10 euros or I have 10 won or yen or you name it, whatever currency, you grip British pound. They won't accept that. They'll probably take U.S. dollars.
You got to use a money changer and pay a high fee to swap.
Right, but if I went to, let's say, for example, there's a pizza place or something like that, that pizza place now will accept whatever El Salvador's country currency is called. I don't even know. I trade Forex, but I've never traded El Salvador.
I don't know what it is.
They probably call it El Salvador peso or something like that. But, so they'll take that. I'm sure they'll take U.S. dollars and they'll take Bitcoin. But if you have British pound or something like that, you
got to pay that fee to money trader. If you swipe your debit card or credit card, they're going to charge you that international
you get 3%. Exactly.
All right, we don't want to go too long on this one. That's a little bit about the regulation that's been...
Basically, this is now being regulated and it's being safe. And the reason why the regulators are really on the ball with it because they want to protect the public because this is being adapted is basically a world currency that's going to be allowed everywhere.
Yeah, I'm going to go ahead and disagree with you there. They're not doing anything to protect the public. The SEC is in the pockets of big banks and they're dragging their feet on allowing these ETFs, and they're dragging their feet on the regulation because you know why? They don't know what to do. They don't know how to handle it. They don't want to come out and say it. So what are you going to do? They're handing out subpoenas to all these crypto companies that are the bigger ones and trying to deter them from doing it better than banks. It's basically what it is.
Whatever. There's a lot of reasons. You're missing my point, though.
No, I get your point. I just disagree with it. The more I've looked into it, the more I disagree with it. Okay, not disagree with you.
But we agree that this is the real deal and it's here to stay, and that's why they're taking it serious. Who's ever rear they're covering, whether it's whether it's publicly traded companies, whatever, they just want to make sure there's less friction as possible.
I guess what everybody be happy. My point is they're using the guise of protecting the public to enforce the regulations that the people that put these people in power want.
Right.
That's what I disagree with. And the more I've done research and looked into this and heard about it and I see what they're doing because we follow it, it just makes me sick. But that's a topic for another day.
Okay, we could be happy. You gotta be telling me.
I'm super happy.
Trying to be happy.
Listen, crypto's doing good. I'm happy. And regulation, as much of a downer as I was being on it, I just disagree with the system and how it portrays. But it's good in general, and the regulation, now they have to deal with it. They don't have a choice. They can't just brush it under the rug because it's here to stay.
They got
That's the big thing. Like and subscribe, guys. Everything's down below.
It's not up here?
No, it's down there. Our head box is up here on YouTube, and our stuff is down here.
Okay, all right.
We'll try and put some cool emojis.
All right, take it easy.